To discuss this and where we go from here, Eddie Ghabour, the co-owner of Key Advisors Group, is joining us. And one of the things that we have to ask about is what Neel Kashkari, the president of the Federal Reserve Bank of Minneapolis, had to say over the weekend, which is we could have for the next 18 months these rolling shutdowns of the economy. So how does the market ever get back on top?
Look, short term, I think we're on very shaky ground, especially after the big bounce back we saw. I mean, we're up over 20% from the March lows. So I look at that as an opportunity to rebalance for those, in my opinion, taking risk off the table, because the one thing that I need to make clear is there's a lot of collateral damage being done economically, and those have not, news is not out yet. The Fed put a great backdrop and kind of eliminated a Great Depression and major bank failures, in my opinion. However, from an equity perspective, there's going to be a ton of volatility in the short term because we have to wait and see how many bankruptcies and things of that sort are going to happen from this massive shutdown that we've seen. There is no playbook for what we're going through right now.
Eddie, it's Julie here. It's good to see you. So as we go into earnings season, which kicks off tomorrow, it's hard to see what companies are going to say, what they're going to be able to say right now about their financial position because everything is so uncertain. So how do you kind of brace yourself or hedge yourself maybe going into earnings?
Look, there's a reason why they say cash is king. And I think right now that's an asset class that many people don't talk about enough. So going into this year, it was our opinion that we needed to be a little bit underweight equities. But considering where we are right now, I think investors need to look at having cash, in my opinion, as part of their portfolio to be able to buy the possibly major dips that we're going to see. Because to your point, these companies have no idea what future earnings are going to look like. And we don't know because, again, this is uncharted territory right now. And so I don't think the market is pricing in some of the negative things that are going to happen here in the upcoming weeks as we attempt to open up.
Yeah, it's Brian Chung here. So as you mentioned, the uncertainty makes it really hard to understand exactly why markets are moving. But everyone seems to kind of, be scratching their heads right now over why the market movements have been what they are. You would expect even with the OPEC announcement, why aren't markets even going up today? So where is the disconnect between the market and maybe the economic data or some of the actual headlines that we would tend to think should be driving a lot of the market movements, but aren't for the last few weeks?
Well, one of the reasons why my Twitter handle is Common Sense Bull is I not only look at fundamentals, but I use some common sense approach to this from the standpoint that I think the disconnect is the market's not down enough. When you look at a year-to-date drop of 17 to 20%, depending upon what day we look at, and you factor the economic shock that we are going through right now, that just doesn't add up. So that's why I feel short-term we have more downside than upside. So some of this was probably priced in last week's market rally that we saw, which is why we're not really seeing anything big on the upside with the news in regards to oil. But again, take a step back and look at the shock we're going through. And for us to only be down 17%, it just doesn't add up.
All right. Eddie Ghabour from Key Advisors Group, we appreciate your being here. All the best to you.